Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. So in this particular installment, I'm actually out of country. So I happen to be in Greece right now as I'm filming this. And I'm at an investment conference, and my wife and I are going to spend some extra time tootling around the seat of civilization. So I'll probably have some All Things Retirement videos kind of chronicling some of those adventures and how it connects back to the retirement planning journey. So just a couple of things at this conference. One of the main components of the conference is talking about capital markets, hearing from investment managers that we utilize to build portfolios. So I'll just share with you a couple of interesting thoughts that came out of their discussions. I think they're very topical, very important right now. And when we look at capital markets, we're always trying to balance off noise that's happening out there in headline newsland with the real issues that we should be concerned about as investors. And so some of the noise coming up over the next little while will be, central bank policies around interest rates, and of course the debt ceiling debate in the US and whether they're going to get that settled. So the first thing, just to underscore this point, I think for all investors, the headline news can create some uncertainty, anxiety, and I think knee-jerk reaction sometimes in terms of how people manage their portfolios. So I know with the asset managers and the pools that we use to help clients manage their retirement portfolios, a couple of comments. One is, first of all, the debt ceiling debate in the US is noise. So it's going to get settled, but you're going to see the media use this lead up to the settlement, eventually the settlement of the debt ceiling debate, as a way of getting viewership and headlines and creating anxiety. That's how they sell circulation. So view it as noise, it's not relevant, and it should not be driving your investment decisions right now. So that's the first thing. The second thing is really interest rate policy by central banks. We know that there's stated policy, certainly with Bank of Canada and the US Federal Reserve is a 2% target rate. But I think at the end of the day, we're probably going to see inflation settling in a little bit higher than that, and that central banks will likely be comfortable with a 3% target rate. And I think eventually you'll see central banks begin to move on their assessment of that. For many years, value investing has been out of favor. In a very low interest rate, growth investing has been the place to be. But as we begin to see the economy begin to transition from zero inflation to some level of systemic inflation, and let's say we'll use a 3%, my example, that provides opportunity for value managers to truly add value to investment portfolios. So anyway, just a couple of comments, very short video. If you're new to our channel, make sure you hit subscribe if you don't want to miss future content. And if you are beginning to think about retirement, if you go to our homepage, you'll find information about how you can get a complimentary retirement snapshot. If you want information about portfolio strategies or general information, education resources on retirement income planning, you'll find those resources on our website, on our homepage. So again, there's a link there in the show notes for you to get back to that homepage. Anyway, wishing you all the best in your investment planning, retirement income planning, and wealth planning journey. You take care. Bye-bye.